Welcome back to Algobot, where we break down automated trading strategies for MetaTrader 5 in plain, practical language. I'm your host here at Algobot, and today we're examining an expert advisor called the Pivot Breakout Engulfing Hedge. This is a pure price action system. No moving averages, no oscillators, just candles and pivot levels. Over the next few minutes, you'll learn how it maps floor pivots, how it reads an engulfing breakout, and how its signature hedge leg responds when a breakout turns into a trap. Everything here is purely educational, so let's dig into how this strategy thinks. So what exactly is the Pivot Breakout Engulfing Hedge? At its heart, this is a pure price action expert advisor for MetaTrader 5. There are no indicators involved at all, no moving averages, no relative strength index, no Bollinger Bands, no average true range. The only inputs are the raw candles and the floor pivot levels the strategy calculates from them. That makes it a clean, transparent system where you can see exactly why every decision is made. The strategy is built around three ideas: floor pivots, a breakout, and the engulfing candle pattern, all wrapped in a managed hedge. Each closed bar, it recomputes the classic pivot levels, the central pivot, resistance 1, and support 1, from a look-back window of recent bars. Those R1 and S1 lines are the levels that intraday desks tend to watch and defend, and the strategy is interested in just one question at each level. Does price break through it with conviction, or is the break a trap? When a strong engulfing candle closes decisively beyond a pivot, the strategy reads that as a genuine breakout and enters in the direction of the break. But breakouts fail all the time, and that's where the signature hedge comes in. If price snaps back inside the level it just broke, the strategy treats the move as a false break and opens an opposite leg to ride the reversal, rather than simply sitting in a losing position. Who is this style suited to, in an educational sense? It's aimed at traders who want to study breakout behavior and hedging mechanics on liquid, breakout-prone instruments. Think major currency pairs or gold on intraday timeframes like 5-minute or 15-minute charts. It's an analytical, rules-based approach, and as always, it carries real risk. No strategy removes the possibility of loss, and this one is no exception. Let's walk through the mechanics step by step. Every time a bar closes, the strategy looks back over a window of closed bars, 24 by default, set by the PivotLookback parameter. From that window, it takes the highest high, the lowest low, and the most recent close, and it calculates three classic floor pivot levels. The central pivot is the average of high, low, and close. Resistance 1, or R1, sits above it, and support 1, or S1, sits below. The distance between R1 and S1 becomes the strategy's measuring stick. Every buffer, stop, and target is expressed as a fraction of that range, so the system adapts to any symbol or time frame without hard-coded pip values. Now the entries. The strategy only looks for a new setup when it is completely flat. For a long, it needs three things to line up on the just closed candle. First, that candle must be a bullish engulfing. Its body must fully cover the previous candle's body. Second, it must be a strong-bodied candle, meaning the body is at least 55% of the full range, which filters out weak, wicky bars. And third, the prior candle must have been sitting at or under R1 while this candle closes decisively above it, clearing the level by a small break margin. When all three agree, resistance has been broken with conviction, and the strategy enters along. The short side is the exact mirror, a strong bearish engulfing that closes decisively below S1. Each base position is given a structural stop and a measured move target. The take profit projects a reward equal to the range multiplied by the reward frac setting, which defaults to 1. The stop is deliberately placed beyond the hedge level, so that on a false break the hedge always engages before the stop is reached. And that hedge is the signature mechanic. While the single base leg is open, the strategy watches price tick by tick. If price travels back inside the broken level, by default a quarter of the range, the breakout is treated as a trap, and an opposite hedge leg is deployed at a heavier size set by the hedge multiple parameter. Now both directions are held, and the counter leg aims to ride the snapback toward the central pivot. Finally, exits are managed at the basket level. The moment net floating profit across all legs reaches the BasketTpMoney amount, everything is closed. If net floating loss reaches the BasketSlMoney ceiling, the whole basket is flattened. This basket logic is the dominant exit whenever any exposure is held. Here's the core of the MetaQuotes language code, just as it appears in MetaEditor. At the top are the inputs. PivotLookback sets how many closed bars define the pivots. BreakFrac is how far beyond a level the candle must close to confirm the break, and BodyFrac is the minimum body size that keeps weak candles out. FalseBreakFrac is the snapback distance that brings in the hedge, while StopFrac, RewardFrac, and ReclaimFrac size the stop, the target, and the hedge invalidation. Hedge multiple sets the heavier counter leg size, and BasketTpMoney and BasketSlMoney define where the entire basket is closed. Now look at the long block. The Boolean broker checks two things: that the previous close was at or below R1, and that the current close pushed above R1 plus the break margin. When that is true, and we also have a bullish engulfing and a strong body, the code computes the hedge level, the stop below it, and a measured move target above the current price, then calls trade.buy with that volume, stop, and target. The short block is the mirror image. The Boolean broke S confirms the previous close was at or above S1, and the current close dropped below S1 minus the margin. With a bearish engulfing and a strong body, the code places the hedge level above, the stop above that, and a target below the current price, then calls trade.sell. Notice both sides use the same range-based math. Nothing here is hard-coded in pips, which is what lets the same logic run on different symbols. Let's bring it all together on this illustrative chart. On screen, we've drawn the three floor pivots as horizontal lines. Resistance are 1 at 1.2735, the central pivot at 1.2715, and support S1 at 1.2695. These are the levels the strategy measures everything against, and our range, the distance from R1 down to S1, is the yardstick for every stop and target. Watch the opening candles on the left. Price is drifting upward from below, climbing through the central pivot at 1.2715 and pressing toward resistance. As it reaches R1, the next candle is bearish. It taps the R1 line, gets rejected, and closes back underneath. This is exactly the candle the strategy wants to see just before a breakout, a prior bar sitting at or under resistance. Then comes the key candle. The following bar opens slightly below that bearish candle's close, then rallies and closes well above R1. Its body completely engulfs the previous candle's body, and it's a strong, full-bodied bar rather than a wicky one. That is a bullish engulfing breakout, and it clears R1 by more than the break margin. All three conditions agree, so the buy entry marker appears right here as the candle closes above resistance. The old resistance has flipped to support, and the strategy is now riding a continuation. From there, price follows through. The next bars push higher, candle after candle, extending the move in the direction of the break. The strategy is targeting a measured move equal to the range, and as price reaches that distance, the take profit marker appears. Notice we never spoke a stop level out loud for the long. Structurally, the stop would have rested below the broken level, beyond where the hedge engages, but on this clean breakout, it was never needed. Now the chart shifts to the short side. After topping out, price rolls over. It falls back through the central pivot at 1.2715 and keeps sliding toward support. Just above S1, we get a small bullish candle, a brief bounce that sets up the mirror pattern. Then the next bar opens above that little candle and drops, closing well below support at 1.2695. Its body fully engulfs the prior candle, and again it's a strong-bodied bar. That is a bearish engulfing breakdown, and it clears S1 by more than the break margin, so the sell entry marker prints as the candle closes beneath support. From the sell entry, price continues lower. The following candles extend the breakdown, carrying price down toward the measured move target, and the take profit marker appears as that distance is reached. Now, here's where the hedge would come in, even though our example breaks cleanly both ways. Imagine that instead of following through, price had snapped back inside the broken level, poking above S1 again, or falling back under R1 on the long. The strategy reads that snapback, by default a quarter of the range, as a false break, and it deploys an opposite hedge leg at the heavier hedge multiple size to ride the reversal back toward the central pivot. Both legs are then managed together, and the entire basket is closed once net floating profit reaches the target, or flattened if the loss ceiling is hit. So on this chart, you've seen both a clean long and a clean short, and you now understand what is designed to happen when a breakout turns into a trap instead. That brings us to the end of our look at the Pivot Breakout Engulfing Hedge Expert Advisor. We covered how it builds floor pivots from recent price, how a strong engulfing candle confirms a breakout above resistance or below support, how the hedge leg responds when a break turns into a trap, and how the basket logic manages every exit on net floating profit or loss. Remember, everything in this video is for educational purposes only. It is not financial advice, not a recommendation, and not a solicitation to trade. All trading involves risk, and losses do happen. If you found this breakdown helpful, please like the video, leave a comment with the strategy you'd like us to analyze next, and subscribe for more MetaTrader 5 strategy walkthroughs. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.